Hello students, welcome to the next section where we are going to do the fifth sum of page number 34 of your textbook. Okay, so let's read it. Mr. Sudarshan traders in a partnership firm in which Ram and Krishna are partners. Profit sharing ratio is 1:1, which means they are profit sharing equally. We have to prepare trading account, profit and loss account and balance sheet using this trial balance. I have seen this trial balance. I have been prepared this all the things previously, so let's start the posting directly. Okay, before doing it, here the sum is twisted. This sum might be hard for some students. Okay, so here we have two accounts, which is a capital account and a current account. In capital account, here they have been set to prepare current account. Okay, so by this, the capital account we will directly write this into the liability side, and we'll prepare now, instead of capital account, we'll prepare the partner's current account. All the calculations and things will add or less in this current account and calculate the whole amount and then put it into the respective current account in the liability side, which means both the capital account and the current account both will come in the liability side at the end. Okay, so let's start with the sum. First, we have to make the compulsory entries, which is opening stock, purchases and sales. Okay, so let's do it. First, purchases. So first opening stock. So to opening stock, which is 36,000. Okay, next to purchases, we have purchases, yes, which is 1 lakh rupees. 1 lakh rupees. No purchase return, so no worries. No sales return, so we directly write the sales. Sales it is 2,08,000. So 2,08,000. Now let's start with the trial balance. Okay, so first opening stock is done. We have the respective balances. So first the capital balance is given. We'll write directly into the liability side by writing this way: partners capital account Ram and Krishna, partners current account Ram and Krishna, and we are making the partners current account here. Okay, so calculation we'll do it here. We'll get the answer and the balance and we'll put them here, so no worries. So we'll write the first the capital balances, which is 1,60,000 and Krishna is 80,000. So the total of this both is 2,40,000. 2,40,000. Okay, that's it. Now current account balance is given, so we'll write first the current account balance in the respective capital account. Okay, so by balance brought down, which is okay. Now they have two different balances. So sorry, first Ram has credit side balance and Krishna has debit side balance. So we have to write both the balances, which means see this first, which means by balance brought down, the credit side balance is 8,000. So only Krishna's balance will write here and the Ram's balance will be dash. And here we'll write two balance brought down. Okay, and we'll write the balance of Ram as 4,000 and Krishna as dash. Okay, so let's proceed forward. First is sundry debtors. We'll write with the debtors. Asset side, sundry debtors, we do have adjustment. So first sundry debtor is 1,73,500. We have to see the adjustment. Adjustment is fifth one, 3,000 from our customer is not recoverable. Recoverable, which means we have to take some money which is not recoverable, which means it is in bad debt. Okay, so we have to less the bad debts. So it is given in the adjustment, so then it is a new bad debt. Okay, so which is 3,000. So we will less 3,000 from here. We'll get the answer as 1,70,500. Okay, this 30,000 will be go in the formula. Okay, profit and loss account will directly start to old bad debts. We will add new bad debts plus new RDD. We'll total them and we'll less than old RDD. Okay, So let's see. We have old bad debts. Yeah, we have, which is 500 rupees. We got the new bad debts as 3000. There was no RDD, so dash will get the total 3500, and we'll less the old RDD, which is given the trial links as 1000. Okay, so we'll less 1000. So we'll get 2500 as the balance. Let's proceed forward. Next is creditors. So it is a liability, so we'll write sundry creditors. The balance is 41,800. Next, bills receivable is an asset, so bills receivable, it is asset, so no adjustment, 47,000. Okay, then it is bills payable, which is a liability, so liability side bills payable, 47,000. Then commission is in debit side, which means it is in debit balance. We have allowed someone the commission, so to commission it is 2,800. Okay, next is salary. Okay, directly salaries, no adjustments are given on salaries, so salaries, how much? So sorry. Okay, first wages were that, but we'll put them. Oh yeah, salary is 3000. Okay, wages were 1760 rupees. Next, furniture, it is an asset, so it will come in the asset side. Furniture, we don't have an adjustment, so it is 25,000. Next, plant and machinery, which is an asset, so plant and machinery is 63,000. We have adjustment, plant and machinery, we have to provide 5% as depreciation, so less depreciation at the rate 5%, so 63,000 into 5% is 3150. So 3150. Oh, so sorry. 63,000 in the column, 3,500, and I have to less it, so less 63,000, which is 59,850. 59,850. So sorry guys. Next, okay, the depreciation amount, okay, will come in the profit and loss account. So to depreciation on plant and machinery, which was 3150. Okay, next is RDD is done. Investment is an asset, so investment side, asset side, investment 10,500. Next is loans and advances given to loans and advances given. Okay, loans and advances are given, it is an asset, so loans and advances given, it is an asset, so 35,240 rupees. Next, insurance is an expense, so to insurance we have adjustment, so insurance is 2,500. Adjustment is prepaid insurance, which means we have paid prepaid extra, so 500, which will be less. Answer is 2,000. Always the prepaid is an asset for us, so in the asset side we have to write prepaid insurance. Okay, next we have to write bad debts is done. Government bond. Okay, so government bonds are an asset, investment so it is an asset, so government bond. Now please guys focus on this, we have a twist here, it is an hidden adjustment. we have purchased government bonds in which we get an interest of 12%. Okay, but this government bond were purchased on 1st January 2019, and we are making this balance sheet or this final account sum for a year, right? So for account students, the financial year starts from 1st April to 31st March, right? 1st April, for example, this year is to 2025, so the assessment year is to 1st April 2025 to the next year 31st March 2026. So here it is given as it is purchased on 1st January, which means to the final year, to the ending of the year, we only have 3 months, January, February and March, which means we get an interest of only 3 months. So let's calculate it first. Okay, so first government bond, right? 12% government bond, it is for 15,000. We only purchase it for 3 months, so we'll get an interest of only 3 months. So we'll first calculate the 15,000 12%, which is 1,800. Then we'll get the answer for 3 months, so we'll multiply the interest into 3 upon 12, which means 3 months of 1 year. So we'll get it into 3 divided by 12, so we'll get 450 rupees as interest of our government bond. It is an income for us, so we'll add it. Okay, so government bond was 15,000, we get interest, so we'll write interest as 450 rupees and get the total 15,450. Okay, we'll proceed further. All the balances are done. We'll get on the adjustments. So first adjustment was closing stock. We'll write the closing stock. Closing stock is 38,000. Okay, first entry here, next entry will come here. So buy closing stock, which is 38,000. Okay, next Ram is allowed a salary of 6,000 and Krishna is allowed a commission of 3% on the net sales. Okay, first we'll go from dot to dot. We'll just see this one, that Ram is allowed for the salary of 6,000 rupees. So we'll give Ram at the salary of 6,000, which means Ram will get the salary. Okay, so we'll write by salary. Okay, so only Ram will get how much? 6,000 rupees. So 6,000 rupees here. Okay, and Krishna will get nothing. But 6,000, this is an adjustment, so the second entry will be in the profit and loss debit side, which means this salary is given by the firm, right? So the firm will pay it, so profit and loss debit side. So we'll write here as, to salary given to Ram as 6,000. Okay, next it was given as Krishna is allowed commission. Okay, he is allowed commission, which means it is an income for Krishna, right? So, but the commission was for 3% on net sales. Net sales means on the sales, okay, after minusing the sales return and everything, but we do not have sales return here, so the net sales is the sales, which is 2,08,000. Okay, so 2,08,000 into how much? 3%, which is 2,08,000 into 3%. Okay, which is 6,240 rupees. So the commission, so we'll write by commission, only Krishna will get as 6,240. Now this commission was given by the firm, so firm will pay it. So we'll write in the profit and loss account. So we have for this side, so we'll write here to commission given to Krishna, okay, which was 6,240. Let's see the another adjustment. This is done. Interest on partners capital is provided as 5%. We have given the interest to the partners on their capital balances, okay, which is 5%. So the capital balances were 1,60,000 and 80,000. So we'll get the capital interest. So we'll solve here. interest on capital account. Okay, Ram Krishna. Ram has 1,60,000 and Krishna has 80,000. They had said 5%, right? So we'll get 5% of this and 5% of this. Okay, so 1,60,000's 5% is 8,000 and 80,000's 5% is 4,000. Okay, so we'll give them the interest. Interest is an income for them, so we'll write by interest on capital, which is 8,000 and other is getting 4,000. Now this interest has been given by the company, so company will bear it, so it will come in profit and loss account debit side. So to interest on capital, the total of the interest, which means 8,000 plus 4,000, that is 12,000. So 12,000. Okay, next, any adjustment? This is done. Depreciation is also done. Bad debt is also done. Prepaid insurance is also done. So we'll get the total. Okay, 2,08,000 plus 38,000, which is 2,46,000. 2,46,000. We'll less the expenses. 2,46,000 minus 36,000 minus 1 lakh minus 1,760. We get 1,08,240 as gross profit. So 2 gross profit carried down. Okay, we'll get this amount here. First, something is left which I remembered just now, that we got this interest which was an income for us, right? Though this is an income for us, so we'll get this income here. So to interest on government bond, okay, which is 450 rupees. Okay, now we'll put this profit, gross profit here. So we'll get 2 gross profit brought down, which is 1,08,240 rupees. Now only this much side, so we'll add first to 440, so we'll get 1,08,690 rupees. 1,08,690. Now we'll less all the expenses and let's see what is the net profit. So let's see, less 2,500 less 2,800 less 3,000, 3,150, 2,000, 6,000, 6,240, and the last is 12,000. We get 71,000 as net profit, which is totally correct. Okay, now we'll distribute them between the partners, Krishna and Ram, to net profit carried. Now we'll distribute them. As we know, they have their profit sharing ratio was 1:1, which means it is an equal. So we'll divide, which means one partner will get 35,500 and another partner will get 35,500, same amounts. Now we'll distribute the profit. So by 1 second. Oh no, I just realized that Ram has 8,000 balance and Krishna has 4,000 balance. So sorry for this blunder. Now let's do it by net profit. Okay, 35,500 and 35,500. Okay, now let's see the total. Yeah, 8,000 plus 6,000 plus again 8,000 plus 35,500, which is 57,500. Here also 57,500. Let's total it. 62,000, 40, 4,000 plus 35,500, 45,740, 45,740. Now let's get this to balance carried down. So here no balance, so the same amount will come up, and here 45,750 minus 4,000, which is 41,740 rupees. Now we'll put this balances of current account into their respective current accounts. Okay, so let's do it. Ram is getting 57,500 and Krishna was getting 41,740 rupees. Now we'll add it. The total is 99,240. Now let's add the liability side. Plus 41,28 plus 47,000. We got 4,28,040 rupees. Now let's add the asset side. 1,70,500 plus 47,000 plus 25,000 plus 59,850 plus 10,500 plus 35,240 plus 500 plus 15,450 plus 38,000. Okay, we got 40,000, 4,02,000 as in this side. Let's check. Okay, I got my mistake. Yeah, the bills payable was 21,000 and I got it as 47,000. So sorry. So less this amount by this. So 4,28,000 and 40 minus 21,000. We get the same answer as 4,02,040 rupees. Again, for a satisfaction, I'll do it. 2,40,000 plus 99,240 plus 41,800 plus 21,000. We got the same answer. Tell it.